Joseph, yesterday we had an interesting announcement from Rio on their major iron ore project. It's a greenfield project in Guinea, in Africa. Tell us a bit more about it.
Yeah, it's kind of good old-fashioned nation building in a way because the scale is incredible. Rio Tinto and the Guinean government agreed an investment framework along with partners including China's Chinalco for a project of $20 billion as well as this immense iron ore mine. They're also going to build a 650-kilometre long railway the length of the country, deep water ports to get it out to the sea and to places like China. That will double Guinean GDP. And it will take decades to sort of build. The question though really is, what do they want this iron ore for?
Right. So given that Rio has a number of iron ore projects and mines in its portfolio, where would Simandou fit in terms of costs?
We first have to consider that $20 billion number is obviously not all Rio. Like the $14 billion infrastructure bill will be hopefully financed by a third-party consortium. You can kind of ask who's got this money at this point and what sort of return are they looking for from effectively building an African country from the ground up. But Rio's contribution is really restricted to the mine. So the mine overall will have capital spend of about $6 billion, and Rio might be spending $3 to $3.5 billion. Now, the reason why they want the iron ore is it's very high quality. Yeah, so they also have mines in the Australian Pilbara region, which has some of the best or lowest cost production, but highest quality iron ore in the world. Simandou is kind of almost as if you dropped that region of Australia into Africa. So that's kind of why they like it. It's complementary to their portfolio.
Right. So if you like iron ore, you like Rio, because it's pretty much a warrant on iron ore, what does this say for Rio going forward?
Well, I mean, it kind of says, well, the benefits of kind of holding on to like long-term options, because Rio started looking at Simandou at the beginning of the century, really, and there have been lawsuits. There's been interest from Brazil's Vale, from BSGR. That's got very messy. In terms of the government switching miners between certain blocks of Simandou because it's such a highly prized asset. Those lawsuits are continuing, but Rio only sort of owns half the Simandou sort of asset at this point. Whatever new owner comes in on the other half, how does that change the infrastructure investment here? I mean, it's all sort of very long term again. But again, as with Rio getting 4/5 of its earnings from iron ore at this point, as a shareholder, you've kind of already made your bed in terms of expecting this from Rio.
Okay, great, Joseph. That's very interesting. Thanks very much.